Hello all. So today I just wanted to discuss briefly some of the latest development in the global economy. Now, what we have seen recently is that the Bank of Japan, that maintained the status quo on monetary policy rate at minus 0.1% since February 16, as well as the target on the 10Y Japanese government bond yield, at 0% targets that they have maintained since September 16, 2016. Now, basically, what they have started a monetary policy normalization. So they have now offering to buy the 10-year Japanese government bonds at 1% in fixed rate operations instead of the previous rate of 0.5%. So they have allowed a little bit of flexibility in the YCC, that is the yield curve control policy, and so we can see now that they will conduct yield curve control with a little bit greater flexibility. And the central bank also said it would offer to buy 10-year Japanese government bonds at 1% in fixed rate operations instead of the previous rate of 0.5%. So tolerating the wider band for bond market borrowing rates. Now, but still what we have seen that there is a formation of inflation expectations in Japan, which is signs of changes. What is happening have been seen in the firm's wage and price setting behavior. And regarding the outlook, even as actual inflation decelerates, but inflation expectations are likely to rise moderately towards the end of projection period. And this will likely lead to sustained rise in prices accompanied by the wage increases. Now, what we have seen, the JPI and INR trending downwards. Sorry. The near-term support was at 0.58 on the spot, whereas it formed a bottom on 4th July at 0.57. It also shows a more or less continuous declining trend since in 24th March 2023 when it tops 0.64. So basically, what we have seen that there is a kind of volatility in the yen with INR, in the JPI and INR and JPI USD, where JPI INR has shown a continuous decline. Yen is a little bit stressed out. It is declining compared to the INR from the top 0.64 to now almost 0.58, and now the this at the 0.58, which is the support, and also on the US market, what we have seen that US PC inflation, that is Fed's preferred measure of inflation, is to its lowest levels in over 2 years. For the month of June 23, headline and core PC inflation decelerated to 3.3% year on year from 3.8% in May. And the US situation has improved as inflation remains range bound with consumption trends remaining stable. The forthcoming non-farm jobs report and ISM surveys will be crucial in this regard. The Seeking Alpha has put it secondly following an infamous transitory call from 2021. Jay Powell and company made a serious policy U-turn, ratcheting up rates from near 0 to 5.5% in the past of 16 months. A technical recession ensured in the first half of 22, but the US economy has been resilient since then, with quarterly GDP recently growing at 2.4% annualized rate. So it seems there might be another hike before pause, given tight labor market and Fed's commitment towards 2% target inflation rate. A positive news is that the Eurozone inflation has settled at 5.3% in July this month, down from 5.5% from the previous month. Now, energy inflation declined on base effect at minus 6.1%, while food inflation reduced at 10.8%, down from 11.6% in June 23. While recent price developments have been less disinflationary, overall headline inflation should continue to trend lower. GDP growth accelerated in the second quarter, expanding by 0.3%, higher than 0.2% expected. France and Ireland have made the GDP growth more resilient, especially we have seen in the case of Ireland. So Ireland remains a little bit outlier. If we exclude the Ireland, I think this inflation moderation will be a little bit challenging. Now, also we have seen this in China. Official business survey showed manufacturing is down, while service and construction are facing certain bottlenecks. Amid this global volatility, the Indian economy remains much more resilient, where we have seen a robust foreign portfolio investment trends, and where the Sensex and Nifties and stock markets are doing much better. And there are a lot of foreign investors who basically, including the chip making, and many foreign investors are showing the interest in investment in the Indian economy. So we'll be coming on, and we'll keep on updating, keep watching that, and we'll be again coming out on some specific issues on rice export ban on the Indian context and some other aspect very soon. Thank you so much for hearing this.